All right. Good morning, everybody. Can you guys hear me? Let me know. We're going to try going back to the mic. I'm not seeing it register down below. Mute. Let me know if you can hear me in the comments or not. Okay, awesome. There we go. I don't get why YouTube does this. It doesn't show me, like, it has a little dial thing in the microphone beside it to let me know like the volume. And it's just not responsive. So like sometimes the volume works, sometimes it doesn't work, and I can't tell the difference. But I won't look a gift horse in the mouth. I'm excited to be here for another amazing week. What is today? August 21st, 2023. We are 3 days out from my birthday. Very humbled and excited to see 28. I absolutely love, where life is going. I love how, I've committed, and a lot of you guys have committed to really going after being uncomfortable this year and continuing to push the envelope, and continuing to execute and really go outside of our comfort zone. When it comes to, goals within trading and outside of trading. I don't just limit this to trading related goals, right? Again, when we talk about being a purpose chaser, which is like what I like to consider myself and consider you guys, right, is really going beyond the money. The money is a means to an end, right? It's to achieve purpose. So whether that's for you to help people, for you to build schools, for you to go somewhere and help build homes, for you to be able to do auto work, around your neighborhood for free, right? Whatever your purpose is, whatever, really, really moves you, because, just making money doesn't move a lot of people at the end of the day. It's what you can do with it and the freedom that it gives you. And that's really the ultimate goal. So just like we focus on the process over the profits, we also focus on the purpose over the profits. I'm not trying to help you make money just to help you make money so that you have a lot of literally useless paper, right, that you can't take with you when you leave this earth, but to allow you to have the freedom to search for and accomplish purpose outside of it, right? If it's only in a few more moments per week, right, then per month, and then the majority of your time you can spend doing that, that's the goal. So we're purpose chasers here, and we're constantly pursuing getting 1% better each and every day. I'm happy you guys could join us in that vein of pursuing our 1% in betterment, right? Make sure you comment that in the chat there. So throw a 1 in the chat, stating your intention to get 1% better. Everything begins with intention. Everything. You don't accidentally do anything. We didn't accidentally knock things out of the park last week, right? In terms of trading, you do it intentionally. So set your intention. We're ready to go, ready to rock and roll, and then we can move from there. So on Monday, too, we have a slightly different schedule for our pre-market prep session. This is our daily session where we go over all the important news, notes, information, trade ideas necessary to remaining successful, right, in this week ahead. And one big part of the Monday session is going over the things on the calendar for this week. So we go over the week ahead as well as our Monday specific news. So let's see what we got going on here. So we'll start with our newsletter, the week ahead, from yesterday, August 20th, and then we'll get into our Monday news. So investors will look to regroup this week after 3 straight weeks of declines for the S&P 500 index. Thank you very much. Thank you very much, right? Making money off that drop, one of the beauties of stock options. And the NASDAQ Composite Index amid rising concerns over higher treasury yields and inflation. Have you guys seen now how they just literally throw out whatever? Like since when has inflation been a problem over the course of the past month? All we've done is gotten better than expected inflation numbers. So they just when no one knows how to say because of the charts, they just say, oh, because of this thing that's happening and this thing that hasn't had any weight. It's really just, hey, this is manifesting, right? The charts are visual representation of the battle between buyers and sellers. Sellers are winning that battle as indicated by the charts. And that's why we're dropping. Inflation has been a worry for all of 2023, right? But markets have still rocketed to, amazing highs. Equities have, right? Individual names, amazing new all-time highs. Inflation was still in the picture, so there's a differing factor here that's the determining factor. The market weakness came right in front of the Federal Reserve's Jackson Hole Symposium, which will be a key focus for investors and include a speech by Jerome Powell. Seeking Alpha analyst Gary Gambino advised readers that they should not expect any big surprises to come out of the conference. Quote, the Fed will probably restate its intent to keep interest rates high for an extended period to make sure inflation does not flare up again, he previewed. Early in the week, global flash PMI prints, U.S. durable goods orders, and European sentiment indicators will give economists more data points to analyze. Meanwhile, on the earnings front, reports from NVIDIA, ticker NVDA, Dick's Sporting Goods, ticker DKS, and Snowflake, ticker Snow, will be closely watched. So, obviously the headliner for this week in terms of earnings after slowing down, the earnings season last week will be NVIDIA. It always reports later than all the other big tech companies. Obviously, all eyes will be on NVIDIA because it, made such a huge move last earnings. Do I expect the same thing to happen? No. Could it? Yes. Right. But don't be that person that's chasing the last move. You really don't want to be that person chasing the last move, right? So take advantage of the opportunities headed up to earnings if NVIDIA presents positive ones, right? Good, high quality looking opportunities, and take advantage using our post-earnings strategies, right? And if you aren't aware of those post-earnings strategies, make sure that you go and you get the recordings for the masterclass that we just recently held, right? Recently now being a few months ago, but the Chart with Confidence masterclass where we go over those post-earnings plays, right? With the peak below and fail and peak above and fail. All of those are so important, so profitable, and really change the game when it comes to playing earnings in ways that aren't incredibly risky, right? Because the thing is, with such a big move last time, people could say, oh, well, NVIDIA made a huge move up. I don't think it's going to do the same thing. I'm betting on a huge move down. And what does it do? It doesn't move at all, right? Or it barely moves, and both sides get burned. And then it can move after, right, the earnings has been announced. So just, don't think you have to play earnings to make money. You can make hundreds of percent, right? Potentially thousands of percent playing post earnings. So there's still plenty of opportunity. Don't get sucked into it. And I'm excited for Snowflake also, right? Snow is in one of those sectors that, has been seeing a lot of bullish sentiment, as the kind of AI trickle down occurs across different sectors. Of course, NVIDIA sees the most to start because it's like, okay, you literally need these chips in order to train these models. But when we talk about, and I'm talking about computer chips and computer models, not Lay's original and, what is it? IMF models. I don't know, whatever the big modeling agency is. But when we talk about Snowflake, right, and all these like cloud companies and data companies and software companies, all of these also see, right, positive, I guess updraft, right? They also see positive moves because of the bullishness around the whole sector. So I'm interested to see if that manifests in the case of Snow's earnings, because we haven't looked. We've traded Snow a few times. I feel like we haven't looked at it recently. It went on a crazy run, and then now it's like just fizzled and dropped back down. Looks like fired a little double top action on the weekly. So headed into earnings, right? I'm excited because they haven't so far had like really big positive AI news affect their earnings, but that would be one where, again, if you've got, we have great profits from last week, extremely profitable week. If you have profits, you feel like playing it, right? That would be something that I might be interested in, just because I'm kind of only interested in sectors that like haven't seen the crazy AI hype yet. So, obviously do some research, don't play with money you couldn't afford to flush down the toilet. But I'm interested in, because obviously NVIDIA has had its huge gap up, but I'm interested in all these other, sectors that haven't yet been affected by AI, but will be, right, and will likely make that the stress of their earnings call. I'm interested to see if they still have that big, blow up potential. So Snow reports, let me see here, August 23rd. So they report, what is that, Wednesday? They report Wednesday after market central time. So, if you want to take a gamble, Snow is one to take a look at. And we have, done fairly well looking at these stocks that, haven't seen the AI pop yet, but that's definitely, a part that will play a role in the recent earnings call, i.e. Google, right? I.e. Amazon, right? Amazon with their Amazon Bedrock B2B AI. And I talked about how I liked Amazon, and Amazon calls paid very well for us on earnings. That's kind of the same vein that I'm thinking about Snowflake. So again, do your own research, all that great stuff. On the labor front, the United Auto Workers Union set a vote for next week on authorizing their leaders to call for strikes against Detroit automakers Stellantis, Ford and General Motors Company. Union President Sean Fain said in a recent statement that talks are moving slowly and have yet to get to wages and other economic issues. Traders could also see the AMC Entertainment 1-for-10 reverse stock split and subsequent APE unit conversion finally make it to the finish line. That's in more degenerate news there as we talk about AMC. Let's also go over the economic calendar. Monday, we got nothing. Nice. Tuesday, existing home sales. Wednesday, we have S&P Flash U.S. Services PMI. So PMI data at 9:45. That could be something when we get that data, early morning that, it can cause some kind of like 1 minute, 2 minute volatility, maybe market, chops until that. And then that is what ends up kind of deciding which way we go with some conviction. That's, that type of data point. So you want to watch out at 9:45 a.m. tomorrow for that. 10 a.m. On Thursday, August 24th, my birthday, we've got Fed officials in Jackson Hole Summit. May or may not be a surprise party. I know that they, follow the pre-market prep sessions pretty closely. So I wouldn't be surprised if that's what they're actually game planning. 8:30 a.m. on Thursday, we get initial jobless claims. And then durable goods orders at 8:30 a.m. as well. So initial jobless claims going to be kind of the biggest thing pre-market to keep an eye on as if you swing anything into Thursday. Then Friday, August 25th, Powell gives opening speech at Jackson Hole Summit. That'll be something to pay attention to. It's at 10:05 a.m. Do I expect him to say anything crazy or anything different? No. Can the markets hang on whatever he says? Yes. And we also get consumer sentiment. So at 10 a.m. on Friday, we could get a lot of volatility because we've got Powell and we've got consumer sentiment data. So Friday is really the big day in terms of like data happening during the day that can cause, some crazy movement. And then in terms of earnings, we have Snow on Wednesday after market close, and we have NVIDIA also on Wednesday after market Central Time. So two major tickers reporting after market Central Time on Wednesday. So let's see what else we got going on. We also have Zoom reporting today. So Zoom video August 21st. I was talking to Vivian yesterday during her one-on-one, and we were talking about just how annoying Zoom has been recently. Like, I feel like if anything, it's making me want to short Zoom going into earnings. That isn't like an official recommendation or anything. It's just based off my personal sentiment that, number one, they don't have support for paid tiers now, unless it's, the freaking commercial tier where you're a company or an enterprise, which I think is negligent and ridiculous. And also they've just been having horrible technical problems. Like, you're a software company, get it together. In terms of Tuesday, we got Lowe's reporting, ticker LOW, Dick's Sporting Goods, DKS, Baidu, ticker BIDU, Macy's, ticker M, and then Toll Brothers, ticker TOL. Wednesday, of course, we got NVIDIA, Snowflake, Splunk, SPLK, and then Foot Locker, ticker FL. Then Thursday, we've got Toronto Dominion Bank, TD, Intuit, ticker INTU, reporting. We've got Ulta Beauty, whose ticker is Ulta, Gap, Affirm, and then Marvell Technology. So Marvell, MRVL, right there, kind of the little brother to AMD and NVIDIA. And they, are also one that post earnings got the big run up. So they've experienced their big run up. They have the potential for a weekly double top. So let's say that their earnings aren't as good, as one would expect, or, they get kind of, they get roasted. Let's say NVIDIA doesn't do well on earnings. And, as a consequence of that and being in the same sector, Marvel will also probably drop. So if you do want to play like NVIDIA through proxy, you can look to play Marvel and then, do that. And of course, if NVIDIA beats huge and it gaps up humongous again, then, you've missed out. You'll still make good money, but you won't make as good as money as NVIDIA. But if NVIDIA does, miss and it doesn't drop a lot, like, you don't have to worry about the IV crush associated if you go with something like Marvel instead. So it's not saying that I expect Marvel to miss or anything. I have no expectations of them. Do your own research when it comes to earnings, but they are, an important ticker. And one that I was a little salty about forgetting about last time there was NVIDIA earnings, because NVIDIA went crazy. I'm like, oh, okay, cool. Like, I'm going to, you think from there, oh, all the other semiconductors, let me check those out. Marvel went absolutely insane. So when I saw that news, I was like, crap, definitely wish I had thought about that. But hindsight is 2020. You got to move forward and focus on, kind of forward-looking opportunities. In terms of Jackson Hole preview, the Federal Reserve's Economic Policy Symposium will take place in Jackson Hole, Wyoming from August 24th through the 26th. The topic of this year's retreat to the Tetons is structural shifts in the global economy. All eyes will be on how Fed officials react to the strength of the economy and potential inflation risks just a few weeks ahead of the September meeting. Federal Reserve Chairman Jerome Powell is expected to deliver an update that relies heavily on recent data, including the recent CPI numbers and core PCE inflation report. Powell is expected to highlight some of the progress made in combating inflation, but stay on script with his most recent commentary about the need to stay vigilant. UBS thinks Powell leaves enough of a hawkish edge that the door remains open to more rate hikes, even though the firm is confident he will stop well short of putting an interest rate hike on the table for September. Bank of America said Powell is likely to reiterate the Fed's commitment to 2% to its 2% inflation target and to push back implicitly or explicitly against the degree of rate hikes that markets are pricing for next year. B of A said it would be surprised to see any large shift in Fed communications around the neutral rate at Jackson Hole, given that there is significant uncertainty around estimates of this rate. If the Fed were to signal expectations for a higher neutral rate, it would likely be interpreted by the market as hawkish, since it implies higher overnight rates to slow the economy. So, I mean, it's one of those things where I don't expect them to say anything they haven't said before. I don't expect there to be any bombshells that are dropped. So I'm kind of, taking this week's meeting with a grain of salt. I don't think that, just like Bank of America, I'd be surprised if there was any crazy shift in the narrative that was put into process this week. So let me see here. All right, just checking in. Cool, everybody's there with me. Oh, and I got the growing mushroom going on in the background. I'm just feeling the fungi vibes this morning, so why not? We'll go with it. We experienced some great account growth yesterday. Looking to continue that this week while also remaining patient. PAYTIENT, of course. Let's go into our Monday specific news now. We'll dive into that. Let's see what we got going on. Okay. I'm also one of those people that, there we go. There it is. Got the newsletter right here. So, top news is there another alternative. Investing since the global financial crisis and coronavirus pandemic had been heavily rooted in TINA, an acronym that stands for There Is No Alternative. While the Fed's aggressive hiking cycle weighed on the performance of the stock market last year, stocks have been in rebound mode for most of 2023. The S&P 500 index is still up 14% year to date, but it has pulled back nearly 5% over the first 3 weeks of August as the yield on 10-year Treasury broke out of the 3.25 to 4% band it had been trading in for much of the year. Snapshot market pullbacks are common, especially when equities have been advancing at a rapid pace for months. Please put that on a billboard somewhere, right? It's part of uptrends, right? There are higher highs and higher lows. Even when you do break weekly uptrend support like we have done, right? It doesn't just mean, okay, we plummet back into recession, right? We likely just put in a higher low than our last, big major weekly swing low, and then we can continue higher. So it doesn't mean, oh, now suddenly we're in a bear market. It just means that we are in, one of those, kind of downward trending for the midterm, right, arenas, where you just don't want to get caught and get roasted trying to play calls, because if you've been trying to do nothing but play calls over the course of the past 3 weeks, it's probably been a tough 3 weeks. In terms of snapshot, let me see here. Market pullbacks are common, especially when equities have been advancing at a rapid pace for months, but many are now assessing some new dynamics that could influence their investing strategies. There's a fresh realization that rates could stay higher for longer, despite some initial forecasts, in hopes of cuts starting in 2024. The Bank of Japan recently lifted the bans on its long-term yields, giving the country, which is the largest foreign holder of U.S. Treasuries, pegged at $1.1 trillion, less of a reason to buy U.S. debt. Bill Ackman's Pershing Square, as well as other hedge funds, have also been shorting Treasuries en masse after the Treasury increased the size of longer-term debt sales to address mounting borrowing needs. Other factors prompting the higher for longer outlook is that economic growth still seems to be running well above Fed estimates, even under the current market forces. Fears of higher government deficits, which resulted in a downgrade by Fitch, as well as sticky inflation, could also extend the cautious tone of the U.S. central bank. Investors will get the latest dose of Fed commentary later this week as Chair Jerome Powell takes the stage at the Jackson Hole Symposium in Wyoming. So in terms of outlook, doom and gloom, and stocks only go up. Predictions are a dime a dozen in the market. And while it is important to be aware of volatility, it's more important to revisit portfolios at regular intervals. That could include diversification or staying in long-term positions and not getting too emotional. Investors that do want to try out new areas or sectors of the market are advised to conduct research analysis before making any decision. I love how they just like are just throwing this like little, I don't know, like do your own research kind of caveat in here, like, hey, check out some other sectors and da da da. In terms of defense news, advanced weapons, the Netherlands and Denmark have confirmed that they will deliver dozens of F-16 fighter jets to Ukraine days after the U.S. approved the transfer of the aircraft to Kiev. That's very important, right? Very, very important, because we've been on the fence about whether or not we're going to allow certain artillery to be given to Ukraine. And we're allowing that, approving that transfer. So we've got a ton of F-16 fighter jets that are going to Ukraine. It remains unclear when the first Lockheed built F-16s will fly, but officials said Ukrainian pilots would need at least 6 months of training on the aircraft. U.S. Air Force General James Hecker also noted this may not be an immediate game changer for Ukraine, as getting F-16 squadrons ready for battle could take 4 to 5 years. So that's important, but I think that it also speaks to the fact that, they're not looking, again, like since when this whole conflict started and we talked about it, I said I thought this was going to be a long-term thing. It has turned into a long-term thing. I think regardless of whether the war ends up being super long-term, the thing that started all this, which was Ukraine wanting to be a part of NATO, the U.S. is still very much pushing for. So regardless of whether the war ends tomorrow or it ends 10 years from now, hopefully not, right? But regardless of when it ends, they want Ukraine's military to be equipped, right? They want them to be trained and ready to take on Russia at a moment's notice and to be trained with American weapons to do so. So regardless of how the war ends up, right, or how long it goes for, this isn't something that the U.S. is budging on. They want them, stocked to the teeth with weapons, whether it's peacetime or wartime. Now, in terms of, Lockheed Martin, right? That's a defense stock that I like. We've traded a few times. I haven't traded it a lot recently. It's been, kind of in a big, kind of mode of consolidation. Looks like stuck here between like 440 and like roughly 466 for a while. So haven't really had any, impetus or any reason why I'd want to trade it. But that is, kind of the ticker that's affected by that story. In terms of automation news, speed bump, General Motors Cruise may need to tap the brakes in California as the state's DMV directed the automaker to cut its robotaxi fleet by 50% following a crash involving a fire truck. The state agency is also investigating other recent incidents involving Cruise vehicles in San Francisco. Cruise explained the crash, saying, quote, "The AV identified the emergency vehicle almost immediately. The confines of this intersection make visual identification more challenging as it is significantly occluded by buildings." So that's just the tough thing, is that like you think about it, you're like, oh, it's easy kind of driving on roads for a computer to do it. But there are a lot of like things that happen on the road that make dynamic learning so important. And, this was just one of those things where you could have a street that's a lot of buildings and maybe trees, and the robo taxi doesn't know where it is, and a fire truck comes through, and now we've got an accident, right? So the things that a person on the ground would be able to handle, the robo taxis haven't been able to do that yet. They'll only get better though. They'll only get better, and I believe that they'll get it right, and eventually driving, like us driving, will probably be more of a thing of the past. Let's see here. Cruises, robo-taxis were cleared for operation in San Francisco earlier this month, which Seeking Alpha analyst Michael McGrath said proved the technology's viability and market acceptance while presenting a unique investment opportunity. In terms of consumer news, shipping wars, Amazon is restarting a shipping service it had paused in the early days of the pandemic, a development that could add competitive pressure for FedEx and UPS. Amazon Shipping allows sellers to ship Amazon orders or products sold on other sites, while businesses must sell on Amazon to be eligible for the service. A spokesperson confirmed to Seeking Alpha. Amazon has already been making gains with delivery speeds, with more than half of Prime orders across the top 60 U.S. metro areas arriving the same day or the next during Q2. Meanwhile, a surge in transportation and labor costs prompted the three shipping giants to encourage customers to use access points to pick up packages instead of having them delivered to a home address. So I think that's important. Amazon shipping, allowing sellers to ship Amazon orders or products sold on other sites. That's just for more of them ingraining themselves into the backbone of logistics itself, right? We talk about, or you heard me talk a lot about Tesla doing the same thing, and one of the reasons why I'm so bullish on Tesla, it's the same thing with Amazon, right? Even if you're a competitor of mine, you will need to use me. That's how the great companies do it, and that's what Apple does with the App Store. That's why they're caught up now with all these anti-competitive lawsuits. If you want to have your app, you're going to have to do it through me, and we have our own apps as well. Amazon, if you want to ship and you don't want to do it with issues, you got to do it through us. And then Tesla, right? I don't care if you drive a Tesla vehicle. If you want to be able to charge that vehicle, you got to use our charging networks. So I think that that's a really important development, right, in terms of like news and positive news for Amazon. So we'll see if they can keep it going and how it works out. Again, this is like experimental, but I'm anxious to see how they can get that going, and if it affects the bottom line, because that's something else that could add to revenue for them. And of course, bad news for FedEx and UPS, um, which I haven't looked at in a bit. Let's look at FedEx here. FedEx and these logistics companies have been kind of on the move. At least FedEx was. UPS definitely looking a little bit weaker than FedEx for sure. Has that news affected them pre-market? No, not really, but it's also one of those things where they don't move a lot during extended hours, so we wouldn't know anyways. In terms of today's markets, mostly green, which is not a shock. Talked about this to end last week about how I was expecting a relief bounce. It's exactly what we're getting. In Asia, Japan, we're up 0.3%, Hong Kong down 1.8%, China down 1.2%, India up 0.4%. In Europe, the FTSE in London up 0.5%, Paris up 1.1%, Frankfurt up 0.7%. The Dow up 0.3%, S&P up 0.4%, NASDAQ up 0.6%, crude oil up 0.9%, gold flat, Bitcoin down 0.8%, down beneath 26,000. And another important, or I'll get to this actually at the end. So what else is happening? China stimulus, central bank modestly cuts 1-year loan prime rate. Bill Ackman and Boaz Weinstein make rival bid for Sculptor Capital, ticker SCU. Goldman Sachs, ticker GS board to discuss dissent over CEO next month. DuPont, ticker DD, to sell 80.1% stake in Delrin business, valuing unit at $1.8 billion. Union at General Dynamics, Bath Iron Works, OK's new labor deal. Then Palo Alto Networks, ticker PANW, pops as Q4 results overpower guidance. Meta Platforms could launch Threads web version this week. Right now, Threads is only mobile. Let me see. Just said that. Here's what Maui wildfires mean for Allstate and other PNC insurers. Those Maui wildfires still going crazy. The air quality on my run this morning was crazy. I don't know if that's still from California wildfires or what we got going on there, but the air quality this morning was not good. Smelled like a barbecue going on. Let's see, and hopefully this camera can freaking get the resolution right now that I've switched off of the actual YouTube window. RSV jab sales for elderly expected to top 10 billion by 2030 in G7 nations. And then EU hits gas storage target early, but prices surge on Australia strike fears. So it looks like gas prices, which have quietly crept back up recently, right? Gas prices creeping up in a lot of different areas, not just the US, but they've definitely crept up in the US as well, and have been quietly on like a little run in terms of like energy stocks. It's something that we play intermittently, right? XOM, XLE, MRO. We're kind of on those on and off. So we'll see if there's any opportunity there this week. ExxonMobil looking kind of interesting here on the weekly. Let's see. Yeah, looking pretty interesting on the weekly for the possibility of a nice weekly double bottom breakout. So we broke out 2 weeks ago, held that breakout above $109.14, held that last week. So this could be a nice entry point for energy longs there this week on XOM, and of course peeking around to other tickers, checking those out as well. But it looks like, did we get the same thing for? We get the same thing for MRO. MRO had already fired a little weekly double bottom a while ago, and it's kind of been struggling with that 26.49 resistance area. that served as support in the past and now has been serving as some resistance. But yeah, energy tickers might be something to take a look at here as we look into, kind of weekly opportunities. What I wanted to talk about was SPY and SPY today. So when we're talking about kind of the expectations for headed into this week, I was expecting a bounce. We got, kind of choppy but still upward movement on Friday, and I'm expecting that bounce to continue. In terms of where we are pre-market, right? SPY had hourly breakout at 436.52. For my people that are part of the group, you're going to get the full actual breakdown of this. But really what I'm watching is SPY breaking that hourly downtrend. It's above it right now pre-market. We can come back down to retest the break of that around 435.31, right? That area. But if we hold that break, we can continue up, and start to see some real bullish movement here this week. So I'm not bullish the whole week, but at least to start the week, right? Maybe Monday through Tuesday, Monday through Wednesday, or just one big day, right? But seeing some type of bounce, and now you start to see it manifesting in the charts. I had suspected it and talked about that on Friday, but we're starting to see that manifest in the charts here today. So in terms of this week and the expectations overall, as for right now, if we do, maintain this hourly downtrend, then we continue to go down. But if we hold above, which we are now, and break it, then we see SPY go to the upside and calls for the move, right? So we would see bullish sentiment in the beginning half of the week and then back to bearish sentiment by the end half of the week, as long as all of these bearish breakouts that occurred hold the retracement of those breakout levels when we talk about all the different tickers that we traded last week. So that's what I'm looking at, and that's the kind of game plan, the landscape as we dive into another amazing week, right? Make sure that you are remaining patient, not over trading and not giving back money that you made to markets last week. If you made money, make sure you pay yourself and withdraw the money, because without paying yourself, you will not get paid. And I know people say, oh, well, I took it from $1,000 to $2,000. I just want to get to 3 before I withdraw. Don't. You'll be right back at $1,000. Likely within a week, right? Because you start upping your scale and you're, applying more risk, and you had an awesome week. You think every week in the market's going to be like that, and it's not. So if you made money, withdraw that money, go back to your base level that you trade with, right? And then continue trading with that same amount. Once you can hit, double that amount multiple times, right, then you can worry about scaling up. But for right now, if you took your, 500 account to $800 last week, withdraw $300 and trade with $500, right? Or if you had a $300 account, you made it to $1,000, withdraw that money and go back down to that $300 account. I'm telling you this from experience, not because I want to rain on your parade, right? Throw a 2 in the chat if you understand what I'm saying. Throw a 2 in the chat if you're ready for another great week, and throw a 2 in the chat if you're ready to take advantage of the opportunities the market presents us with today. I know I for sure am. We got only a few spots left, and the sale ending soon for stock options made easy. So if you have friends out there that need to be making their money work for them in markets that got destroyed last week, right, and they need to be involved, make sure that they're here and that they're involved. Friends don't let friends stay broke. I had one of my friends who's gone through, taking the course, and he had a friend who was getting into options, and he was in Apple calls last week while we were in Apple puts. And I was like, man, tell that guy to give me a call. And now they're in stock options made easy. And I walked him through exactly why we were in Apple puts and why they paid so much. And he's not going to make that mistake again. Unfortunately, not everyone is like smart enough to make those decisions on their own. A lot of people are just down and keep firing money in the hole. But if you have friends that are struggling and they could be doing better, right, and you don't have to pull teeth to get them to make an investment in themselves, make sure that they know, right, because this is something that could really change things for them. So, and of course, DM me, text me if you have anybody in mind, and we can do a combination outreach. But we're trying to grow together and grow this community so that we have all these people that are worried about growth. That way it becomes cool, right? It becomes cool to grow instead of you being the only person in your immediate friend group or your immediate surroundings that want to grow. That's not fun. You feel like an outcast. You feel like an outlier, but you can get people to make positive change, right? And that's what we want to do, to the point where now you feel comfortable aiming for growth, getting 1% better, pushing the envelope, as opposed to you feeling like you're doing something weird, right? Change your environment around you willfully, right, by getting people on that same wave as you. So that's my little 2 cents for today. I'm going to dive into the market, make the Loom videos. Have a great day, right? And I'll see you guys back here tomorrow morning for our next pre-market prep session. Peace, everybody.